Our insurance agent has been a friend of mine and my family's for years. Okay, here's what we have. We have a tap room. We have, consumable product. Now we have a production center and another consumable product. So, it was something that you're really going to pay about 3 or 4 different insurance policies. You're going to have your property, you're going to have your business liability, you're going to have all the equipment. We do own both of the buildings that we're in, so now you've got a whole nother LLC that just handles the real estate, so then you have an additional amount of insurance. I feel covered on all aspects. I mean, there's been very few situations, knock on wood, that we've had to utilize them, but I feel pretty well protected.
Northern Initiatives is committed to entrepreneurs like you because you are the people who are creating jobs and enabling the communities of our region to thrive. After completing this training, you'll be able to explain why insurance is important for a small business, identify the types of insurance which are required by a small business, and identify other types of insurance that a small business should consider.
Insurance manages the impact of risks on life and business. Without insurance, we'd be left to bear the brunt of the costs of casualties. Whether you purchase health insurance or you're protecting personal or business property from losses, insurance can replace or repair the damages. Insurance is a precautionary measure that diminishes the adverse effects an event can have on you, your business, and your family. Loss of income insurance could mean the difference between success and failure in the event of an accidental injury or illness. This income assists in making payments during those difficult times. Purchasing required insurance and paying the premiums will keep your business running. Failure to comply with federal, state, county, and local regulations can have repercussions that damage the reputation of the owner and the business. Disasters, system crashes, and electronic downtime will happen. Shielding your business from these effects with insurance, a plan for business continuity, and reliable system providers are constructive steps to managing your assets. Cash flow returns to normal in an expedited manner, and losses that could have closed the doors are minimized. Business owners desire to have the best products, employees, and market reputation. However, faulty work, inadequate or hazardous products, damages, and incidents do happen. Liability insurance minimizes these effects on the business, assists in settlements, and allows the business to continue. Insurance and benefit packages are incentives to help retain employees. Employees may think twice about leaving your business for the competition if they particularly appreciate the benefits your business offers. Unemployment and workers' compensation insurance afford workers support in less favorable times or when injured at work. So how do you know what insurance to purchase and why? Well, some insurance is required by law and other insurance is elective. Both state and federal law have insurance requirements for businesses. You should contact your state, county, and city with questions regarding obligations you may have to purchase insurance. States may provide guidelines on insurance company program requirements for small businesses. State guidelines may also describe requirements for small business itself to provide employees with the opportunity to participate in health insurance programs, for example. Now, insurance coverage is available for every conceivable risk your business might face. Cost and amount of coverage of policies vary among insurers. You should discuss your specific business risks and the types of insurance available with your insurance agent or broker. Your agency can advise you on the exact types of insurance you should consider purchasing. Business owners purchase general liability insurance to cover legal hassles due to accident, injuries, and claims of negligence. These policies protect against payments as a result of bodily injury, property damage, medical expenses, libel, slander, the cost of defending lawsuits, and settlement bonds or judgments required during an appeal procedure. Companies that manufacture, wholesale, distribute, and retail a product may be liable for its safety. Product liability insurance protects against financial loss as a result of a defective product that causes injury or bodily harm. The amount of insurance you should purchase depends on the products you sell or manufacture. For example, a clothing store would have far less risk than a small appliance store. Business owners providing services should consider having professional liability insurance, also known as errors and omissions insurance. This type of liability coverage protects your business against malpractice, errors, and negligence in provision of services to your customers. Depending on your profession, you may be required by your state government to carry such a policy. For example, physicians are required to purchase malpractice insurance as a condition of practicing in certain states. Property insurance covers everything related to the loss and damage of company property due to a wide variety of events such as fire, smoke, wind and hailstorms, civil disobedience, and vandalism. The definition of property is broad and includes lost income, business interruption, buildings, computers, company papers, and money. Property insurance policies come in two basic forms. 1. All-risk policies covering a wide range of incidents and perils except those noted in the policy. And 2. Peril-specific policies that cover losses from only those perils listed in the policy. Examples include fire, flood, crime, and business interruption insurance. All-risk policies generally cover risks faced by the average small business, while peril-specific policies are usually purchased when there is a high risk of peril in a certain area. Contrary to popular belief, homeowners insurance policies do not generally cover home-based business losses. Depending on risks to your business, you may add riders to your homeowner's policy to cover normal business risks such as property damage. However, homeowners policies only go so far in covering home-based businesses, and you may need to purchase additional policies to cover other risks such as general and professional liability. Businesses with employees are required by law to pay for certain types of insurance: workers' compensation insurance, unemployment insurance, and, depending on where the business is located, disability insurance. Nearly every state has laws regarding workers' compensation insurance. This insurance protects employees against lost income resulting from work-related illnesses or injuries. These insurance laws address amounts to be paid in, rehabilitation, retraining, beneficiaries, and medical payout limits. Unemployment insurance provides benefits to employees who become unemployed through no fault of their own. They must be willing and able to work, and they must be actively searching for employment. Federal laws regulate unemployment insurance, but state agencies administer the programs. Employers remit tax payments to both federal and state funds. The federal tax amount is a percentage of the income earned by the employee up to a specified amount for the calendar year. Each state provides a calculation for the business to use to determine the amount due to the state. As unemployment claims rise, the percentage of income to be remitted may also climb. Information on unemployment insurance can be obtained directly from your state and the U.S. Department of Labor. Now, even if you rent or lease a space, you may still obtain insurance on the contents of the building. Inventory coverage is based on the average inventory in the warehouse on a monthly basis. Depending on the policy, this insurance covers goods owned and in your possession on consignment or sold and not yet delivered. Confirm you have insurance coverage in place for stock ordered but not yet received. Shipping terms may also determine responsibility for a loss. Property insurance may cover the contents of the building, but can you or your business survive until it's back up and running? Loss of business income policies will replace some of the business's income if business operations are interrupted due to a covered loss, as well as certain other losses. Policies typically begin paying 30 to 60 days after the loss. It's important to know the policy details so you're not surprised at a time you can least afford it. Loss of income protection for a business can be added to a policy, but, for example, when a business is closed due to a flood and the policy does not contain flood coverage, the policy may not pay for loss of income. Also, losses must be proven to be paid. Be sure to keep accurate and organized records of income and expenses. Many states also require autos to be insured for liability at a minimum level, whether they're used for business or personal use. You may be required to provide additional coverage and insurance for employees who use your personal or company vehicle. While your state may not make it mandatory to provide liability coverage for directors or officers of a corporation, lawsuits could be filed in response to what a director or officer of the company did or did not do. This protection can be obtained through a directors and officers policy, also known as a D&O policy. Health insurance is not only a practical category of coverage, but it's also a valuable employee recruitment and retention benefit. There are many more options available to small businesses than in the past. You may choose to purchase coverage directly from a carrier, participate in a state or a federal-sponsored program, or join a larger group that's formed by a business group such as your local Chamber of Commerce. Finally, you may want to also consider life and disability insurance coverage. Take the time to ensure that your business holds all of the insurance required by law. There are other circumstances where you may be required to purchase insurance. Organizations you do business with might have specific requirements. Your liability insurance needs change. Contact your agent to verify that you have the minimum or greater coverage at least once a year. Financing your business creates a risk for a lender or investor. To protect the bank or investor, certain insurance obligations may be spelled out in your financing agreement. A loan may require providing the lender proof of adequate insurance coverage on a building and other property necessary for continuing operations. The requirement may include a provision for the interruption of business by providing for funds during the time of reconstruction or repairs. A bank may also require that it be listed as the loss payee on the policy to protect the bank's interests in the event of a claim. Many banks and government loan programs require a general life insurance policy or potentially a key person policy, also known as a key man policy. These policies provide funds for business continuity when a person who is vital to continued operations dies or becomes ill. A policy may supply funds for a transition period in the event of the death or illness of the covered person, or if he or she is called to active duty status in the military. Even if a lender does not require a general life or key person policy, you may consider purchasing one. Consider what would happen to your business if you were to become sick for a long period of time. Who could run your business for you? Do you have a plan for your business in the event of your death? You may consider life insurance to cover all liabilities of the business. Another type of insurance that could be required for your business is a surety bond. A surety bond is a form of guarantee for contract completion. An obligee or business seeks a principal or contractor to fulfill a contract, but the business who is hiring the contractor wants to be assured that the project will be completed as required. In other words, the surety assures a successful contract because it assumes all financial obligations if the contractor does not deliver. Most public construction contracts and some private projects require one. Deciding to insure is part of managing your risks. If a policy does not make sense from the standpoint of premium versus possible loss, then maybe the insurance is not feasible. If, on the other hand, the replacement cost or losses are significant and you cannot cover the costs or losses in order to continue business, it becomes a rational decision to purchase coverage. Factors that affect your premium are the amount of the deductible, the coverage limits, and your credit. Deductibles are out-of-pocket expenses paid with each filed claim. The greater amount you're expected to pay, the lower your premium should be. Claims will have a coverage limit on the amount that will be paid. Be certain the amounts are within reason for your type of business and that you're not buying coverage above or beneath your needs. And your policy should allow for growth of the business. If you currently have one location but plan for another, your policy should allow for this expansion. Ask about the impacts of your growth expectations before you purchase a policy. Since insurance is protection, you want to know that you're getting the best. Imagine you've made a list of your risks, your liabilities, and what you can pay. Now you're ready to shop for the best policy and agent. Do your research and ask questions. Learn to network with other professionals in your field and find out if they're satisfied with their carrier and agent. Weighing a larger company versus a smaller one may come down to a preference if both insurers are reputable and solid. Some individuals prefer an agent they can visit. Others may feel a larger company is more accessible by having call centers available during extended hours. Your policies should be kept in a safe but accessible place. You should know exactly where to find them in the event of a claim or for review. Keeping all policies together in a paper file or scanned to an electric file saves time. Keep emergency phone numbers or claim contact information in more than one location in case your computer system is inaccessible during an emergency event. Train staff on the steps to take and who to call. All this information should be added to your business continuity or disaster recovery plan. Add an annual reminder to your calendar and risk management checklist to review your insurance coverage with your agent. Credit scores can be a deciding factor in determining the amount of an insurance premium. Paying premiums promptly also helps to keep premiums lower. Go outside. Everything has a risk involved with it, even staying inside with a blanket over your head. We risk not enjoying snow, rain, and sunshine. When we prepare for the weather with protective boots and coats, the outdoors is enjoyable. Without these, the weather is all we can focus on because we're cold and wet. Insurance provides protection from the risks that hinder the productivity and cash flow of a business. When the risks are covered, owners and employees can feel secure to go out to focus on business growth. Insurance minimizes the impact risks can have on your ability to continue operations. It impacts continued financing, helps retain employees, provides protection from liabilities. Check federal, state, county, and local laws for insurance requirements. Pay any required unemployment insurance, workers' compensation, and disability premiums on time to keep your business reputation intact and avoid potentially costly penalties. Professional licensing may require additional insurance or surety bonds. Lenders and investors often require insurance protection. Your location, facilities, autos, and type of business operations determines insurance needs. Evaluate your risks, ask questions, compare policies and agencies. Keep accurate records for claims. Keep emergency contact information in an accessible place. Update beneficiaries, obtain releases, and maintain adequate coverage.
We've probably started offering medical probably been 7 or 8 years, long before we even knew ACA was going to happen. And I did that pretty much because of my whole premise of being people-focused and people-oriented. I decided early on that one of the things that I thought would be very important for our business was longevity, keeping people around. You get the right people on the bus and keep them on the bus. And that's something that I think, from a long-term perspective, people are looking for. That's just to me, it's like you become a real employer when you have those kind of things.
We realize the success of your business directly impacts the success of your community and its people. So we push a little harder and care a bit more because it's not profit for us, it's prosperity for all.